Hello everyone and welcome back to our continuing tutorial videos on MetaTrader. I am Vishnu Poonai and the product owner is Dr. Masood Sajadi and he is also the mentor. Today we'll be looking at a research report on the RSI indicator and its relation to the overbought and oversold products or currency trades. Let's look at a quick introduction on how this report will be broken down in this video. So first, we're going to be looking at the RSI indicator, what it is, and its relation to, once again, the overbought and oversold types of trades. And we're going to look at the relevant concepts related to this so we can have a general understanding of what this does at a foundational level. And then we will demonstrate these concepts in Expert Advisor, which is our advisor that we've chosen in previous videos that we previously did the code review on, the self-optimizing RSI or MFI trader. And then finally, we will just have a quick summary and a conclusion on basically what this is, how it works, and how it can go ahead to benefit traders. So first off, what is the relative strength index or ISI indicator? So this is a very vital and important indicator in MetaTrader and trading in general, since it answers two crucial questions in trading. How does a trader identify when a currency's price is too expensive to open in a long position? And how do you know whether your currency is too cheap to open in a short position? And this may sound very mundane or very open-ended questions. However, these two questions together lead to many deep levels of trading experts and a lot of contention or debate among when to get in and when to get out in a particular currency pair as to maximize profit, since as we know, the goal of trading is to make profit on your trades. And what the RSI indicator does is to help identify where these positions are at given times or periods to help influence a trade. Now, it's not 100% perfect or 100% always correct. That will depend on the expert advisor or the trader. However, this is a very important tool. So what it is, basically, it's a oscillator or a technical analysis tool that bands two extreme values. In this case, it's the overbought levels and the oversold levels, and it builds the trend indicator within the results. Now, the scale of the oscillator is from 0 to 100, and the typical or general consensus on when a currency pair is in overbought situation is any values over 70 on the scale, and if it's in a oversold position, then it's any values below 30. So let's just have a quick look at this graph here. As we can see here, with the indicator on, it's this green section here is overbought. It's set over 70, and this here will be in an overbought position, and this red line represents the oversold, and as we can see here, it doesn't dip below the oversold position. Now, what do you do with this information? Well, typically what this information indicates is that if it's in a overbought position, it means that the pair is moving in an uptrend, and it may reach a point where there are no buyers left in the market. And that's basically the general definition of the pair is said to be an overbought position. And what that means is that the trend will most likely go in reverse, since it can't head upwards forever. There will eventually be no buyers left in the market, and that would be a paradox, or can't work. No trend can go upwards forever. So that means that if it's in an overbought position, it's more than likely, not 100%, to move in a reverse, right? And this basically reflects the expectation that the market will correct the price in the future. And traders or expert advisors use this information to sell orders at this point to make a profit. And it's traders who typically invested in this currency pair use this metric to sell their position from an earlier buy-in. Now, that leads to the opposite end of the scale, which is the oversold position. Now, just a point of note, the overbought position is also known as the overvalued position, where if a pair is currently in this position, the product is currently in this position, it's typically said to be overvalued, and market correction will more than likely happen sooner rather than later. Now, let's look at the reverse of that, which is the oversold position. So, what this is that, similar as we said, if a downtrend continues, then the price is too cheap and eventually brings more sellers on the market. And this could mean the result towards a potential uptrend in the trade or the product. And the oversold position is an indicator that it's undervalued or that the price is trading lower than a third of its recent price range. Now, a point of contention is that oversold is typically more of a subjective term. I mean, they're both subjective terms, but oversold tends to lean more on the subjective side, since the period for setting what oversold is, the threshold, varies. And we'll see this later on when we do our quick demonstration, or we'll look at some results, sorry. And what that means is that, for example, the typical set for a position to be in the oversold is under the oscillating level of 30. However, research has shown, and in our own testing, that this number fluctuates depending on the period and the volatility of the market. And it can range from 30 to even 50 on the RSI index, or in certain cases as high as 70, with the overbought set at 90 to 100. Now, two important terms that are relevant to overbought and oversold is reversal and pullback. Now, a reversal, as we've said in the overbought and oversold position, means that it's a reversal in trading in the price direction of an asset. So what that means is that it can happen either on the upside or downside. And in the, let's say we're on the uptrend and we're in the overbought position, a reversal would mean that the uptrend reversal will mean that it will now be head to the downside, whereas a downtrend reversal will be headed to the upside. Now, an important point to note between reversal and pullbacks is that where a pullback is a minor shift or brief reversal in the price that usually lasts a few sessions or periods, the difference between the two is that a reversal is the change in direction of the asset, a major shift from up to down or vice versa. Whereas a pullback would mean a minor shift. For example, let's say we're in the downtrend and it hits a minor shift towards uptrend, but overall it shifts back towards the downtrend. Then it is still said to be in a downtrend position overall, since the price of the currency or product has not changed to a uptrend, a full reversal, if you may. Now, let's one quick point of note before we move on to our discussing our expert advisor. Here's a MetaTrader. Let's look at it in a real time, shall we? So what we can do to get your RSI indicator on this chart, as we have here the Euro USD dollar, you go to Insert, Indicators, Oscillators, as we demonstrated at the noted that the RSI is a oscillator, and Relative Strength Index here, and period. Typically, the general consensus is the period for gauging the RSI values is a period of 14, and we set it to red, and our fixed minimum which 0 and fixed maximum 100 on the scale. Okay, and as we see here, our RSI indicator is on compared to our currency chart here. And here we have the corner here 70 that recommends the line here for overbought position, and 30 represents for our oversold position. And as we can see from this slice here, from 19th of September to here, currency hasn't pushed a overbought position. That's a minor bump here. However, it has pushed oversold twice here, and we can just scroll back and see any differences. Just some minor oversold positions and not much overbought. Here we have a tick towards the overbought. Okay, now let's go on to what we use to optimize or look at this research. And that's our expert advisor, which is the self-optimizing RSI or MSI trader. So for the purposes of this research and this demonstration, we chose to stick to the the RSI indicator. And what REA basically does or is that it's a self-optimizing expert advisor where it takes historical periods and determines the best position on selling or buying currency based on the overbought or oversold indicator of the currency trends. So what this expert advisor does is that it trades on the RSI indicators, the overbought and oversold position. And the trigger is that if the indicator crosses the overbought value from the top, a sell order is issued and a buy order is issued if it crosses from below the oversold position. So let's look at page here. So what it does, as we discussed in our code review, has a lot of inputs. It looks at the optimization periods is 144, indicator value RSI, the top value 100, indicator value 0. However, this can be changed as we will look at. And our basic stop loss, take profit positions, and it can even be set to break even. Now, in using this expert advisor, it was found that we can change the top indicator value, bottom indicator value, which sets the overbought and oversold positions. So in an effort to push the established criteria of 70-30, for the first test I did on this concept, I used the overbought position at 80 and the bottom oversold position at 50, which is typically outside the norm. However, we did get results based on this, and as we see here, we did generate some profit even though it was outside the shift of the general top and bottom positions. And like I said, we did test other values where we went to 70-30, and what we did achieve is a difference in the profit between the two. So as we can see, changing this variable does affect where the expert advisor decides to do the buying and selling, as it would affect a trader just looking at the chart, because you're dealing with different thresholds of your overbuy and oversold positions. Now, what this demonstrates to us is that these positions are fluid. It doesn't mean that setting at 70-30 or 80-50 or 120-50, etc. will always give you profit or a specific amount of gain. But what it does teach us is that research and knowledge into this type of trading is necessary, or you can be, you may make a profit, but you may have not be efficient or be making as much as you can if you don't fully optimize your expert advisor that trades on this type of algorithm. And based on our research, we can tell that it is beneficial to optimize forward and historical periods on different levels of settings depending on your chosen currency to pick the best optimized period. Since this is something that is very important to trading, it's one of the most or the most traded type of trades, the overbought and oversold positions in the market. And there's a lot of information, a lot of traders that use this. However, you will only understand how this works as tinkering or altering the top and bottom indicator splits. All right. Now, finally, let's just summarize what we've learned today or did our research on today. The RSI tool is an indicator for identification of the overbought and oversold positions on currency product. And the oversold and overbought positions are the two ends of a trend set together on a currency pair or product. And the overbought represents the top end trend, and the oversold represents the bottom end trend. Overbought represents the overvalued, oversold represents undervalued. And these points represent a potential reversal in these positions, which can occur more than likely. And if you're in the overbought position, it is recommended to sell. And if you're in the oversold position, recommended to buy. And that's pretty much our conclusion as well, since the RSI is a very powerful tool in determining to the biggest buying and selling positions in Forex trading. These, as we can see when we did our optimization in our expert advisor, it creates variations in the amount of profit and the amount of trades that it is able to carry out on a given period. So the recommendation is tweaking and experimentation with these values to help determine your optimal buy and sell positions on a given period or given currency pair. So finally, I am Vishnu Poonai. If you have any inquiries for this tutorial, please free to email me at this email. And if you have any project inquiries, please free to email Dr. Masood Sahaji at this email.